It's quarter 4. Do you know where your gross revenue is? Do you know where your net profit is? If you don't, stay tuned. You know I'm going to say, get some pencil and paper because I'm going to teach you what you need to do to prepare for taxes, your 2024 taxes. Are you ready? Go and get this stuff because I'm not going to ask you again. And come on back so we can get started. Let's go. Well, how to do, everybody? Welcome to the From Chaos to Clarity, Unleash Your Business Potential podcast. I'm your host, Sonia Jones. Good Mr. Miyagi of Money. And as you can see, my background has changed. So shout out to my hubby, Perico. He repainted my office. So before it was blue, but now it is white. And it's got some little gray trim. But if you can see, I've got some of my certificates. So if you want to see, like, that's my certified county finance officer certificate. And these are my certificates from the city of Memphis, incubator accelerator classes. And this is my most recent cohort from Twin Day that's in Nashville. So I just got a couple of my things up here, but I'm going to post some of my other stuff as I, get things in order. I can't show you the rest of the office because it's still a hot mess. But I'm going to be adding some more things to the wall as we get settled. But shout out to my hubby for giving the office a fresh new look. I wanted to brighten things up a bit. So with that being said, I got my holiday hair. This is Thanksgiving week, so it is what it is. So this is the time for us. I can only speak for myself. For the accountants and bookkeepers, the GIP squad, we are still doing some work throughout the week, but we are closed to our clients and the public this week. So of course, that's why we are recording podcasts and all of those things. So that keeps going, right? So with that being said, I wanted to talk about quarter 4. So quarter 4 is definitely the time that we at GIP start talking to our clients about what they're going back to their goals. Now, granted, we do talk with them throughout the year about their goals. If they give their goals to us, let me just add that too. But every quarter we provide what we call a report card that, depending on the client and, if they're service-based, product-based or whatnot, we provide for them their net profit, their accounts receivable, if they are, doing invoices, the clients that owe them the most money, if they have accounts payable, what that balance is every quarter. And then the most important piece of data for me that I like to see is the days of cash on hand. So it's basically what they have at the end of the quarter, the ending balance for their bank account, subtracted or divided by their average monthly expenses. And then that lets them know how many days of cash on hand. So if God forbid, if anything happens to them or the primary income generators of the business and they have to halt and still have to, honor their obligations, how much money that they actually have to do that before they run into a cash flow crisis. So those are some of the things that we like to provide to our monthly bookkeeping clients. But telling you all that to lead you into our talk today about your quarter 4 tips to get you ready for 2024 taxes or the current year taxes. Okay. So with that being said, here are a couple of things that I have, and I have a little gift for you at the end of the podcast that we are going to be offering for free because I'm really not a big Black Friday chick. So I'm going to be reading straight off of the gift that I'm going to give you that I'm going to talk about, and the info is going to be in the description. So first thing, when you're getting ready for your current year taxes, Let's just be honest. Can we be honest? Because, I love you, right? I know most of y'all have probably stopped looking at your accounting software. You have stopped um, looking at your bank statements. You've probably looked at your spreadsheets or your DIY trackers. It's like, child, I'll just get back to it in January. No. We gotta start getting back to it now, because guess what's going to happen at the top of the year? You're going to be bombarded with resolutions and goal planning and stuff like that. And so we want to go ahead and get you focused to lock in, as my son Jaira says, to lock in to getting your year-to-date financials together. All right. So the first thing you got to do is go ahead and get your QuickBooks up, get your bank statements out, get your spreadsheet back up. And I want you to gather all of your revenue. We got to find out how much money that you made so far for 2024, right? Getting all your revenue together. But let me be clear on some things that we've seen with our clients that I want to make you aware of. The first thing, of course, we're going to ask you to, organize your receipts. I would even say, because I know some of y'all still are using PayPal, personal account, Cash App, personal account, Zelle, personal account. Go back to all of those and export how much you've made. And if people have paid you through those avenues, go ahead and collect that information, because that's gross revenue that you have to collect to actually see how much you've actually made. Okay. And let me also say this as well. If you are using said platforms for like your online purchases and things like that, do not take the payout that you get from the bank statement as law, right? Because what that, like say if you get, if you make $100 sale and you get back $97, you should actually, from a bookkeeping standpoint, be recording the actual gross revenue, which is the $100, and then the $3 transaction fee from that platform should be expensed as a taxable deduction. Okay, so that's pretty much how that works. So if you got any income from any of those said platforms, make sure that you're recording the gross revenue, and then any fees that is taken from you to maintain that platform and those sales, those are tax deductible expenses. Okay, so you got to separate those things out. It's kind of like egg, and you separating the egg yolk from the egg white, right? It's kind of like that. The next thing that you want to do is make sure if you received any type of loans, like if you receive like a $5,000 loan, the loan that was deposited into your bank account is not considered income. That should be on your balance sheet as a liability account, right? Because you didn't earn that income, right? And you don't want to be paying unnecessary taxes rather on loans, right? So if you got a $5,000 loan, you do not include that in your income, right? Grants, you do. You do include that on your income. And if you do have a grant, just be on the lookout, especially if it's over $600, because expect to receive a 1099 if you filled out a W-9 for that grantor to receive said funds. Okay? Because you are going to have to report that income. All right? Fit. Last thing with the revenue, if you put any of your personal funds into the business, ma'am, sir, that is not considered revenue. That is equity. So if you've heard of owner's contribution, that's what that is. It's going to be assigned to your balance sheet. So do not include loan proceeds, and do not include your personal funds that you invested into the business as income. It's only revenue that you've actually earned into your business. Okay, so that's the first thing. Get all your income together. Next, calculate all your expenses. Okay, so when you're calculating all your expenses, we already talked about, the merchant and POS fees, right? Whether it's a transaction fee or the monthly maintenance fee, those things are going to be tax deductible. Let's talk about credit cards, shall we? Ma'am, sir? If you have a business credit card and you are charging expenses on your business credit card, business expenses, let me just add that in there. You can, of course, expense those things out. You cannot expense the credit card payment, y'all. You cannot expense the credit card payment. You can, however, expense the credit card fees and interest. So all my Amex folks out there, because most of the Amex cards gonna have an annual fee, right? So if you have an annual fee, that's deductible. If you have interest, that's deductible. Okay. For those of you who are startups and you may not have a dedicated business credit card, my suggestion, pick one of your credit cards and dedicate that as the blessed business credit card. Okay. And do not mix personal with that business, with that credit card. Dedicate one personal card for all business expenses. Okay. And then that way, any fees or interest can be deducted because you can vouch and say that, hey, I'm not mingling personal and business on this credit card. Okay. But if you do, you got to do it right. Okay. So there you go with that. But again, credit card payments are not tax deductible. Okay. Next thing, if you have spent over $600 with a contractor, whether it's a social media person, somebody that helped you, virtual assistants, anything like that, if you spent over $600 with that individual, you are going to have to make sure that you get a W-9 from that individual and issue them a 1099 for the wages that you've given them, right? That's non-employee compensation, the 1099 NEC. All right. And then also, if you are a business and clients have spent over $600 with you, make sure that you give them a W-9 so they can issue you a 1099 as well. Okay. Next thing, let me see. If you have, because we're all in business to make money, right? If you have profited and you take some of the money from your business checking account for your personal use, that's not an expense. That goes on your balance sheet as owner's draw. Okay. So no personal expenses are to be deducted from your business. All right. So again, calculate your income, calculate your expenses. Next thing, once you have all your income, once you have all your expenses, subtract your income from your expenses, and that's going to give you your net income. All right. If you have more revenue than expenses, you're going to have a profit. That's a positive number. And that positive number is going to be taxed. Self-employment tax is 15.3% unless something happens between now and January the 1st. All right. So just be prepared for that. So if you do have a profit and you calculate that self-employment tax, you're like, ooh, I may not have the cash reserves to pay this tax, or I might not have anything to offset it. You got about a month and a half to start, investing in some business expenses to offset that and reduce your tax liability. Okay. If you have more expenses than revenue, you now have a loss. That's going to be a negative number. If you're filing on the Schedule C, you have your personal income, or maybe if you're filing with your spouse, that can be, that can reduce your adjusted gross income, your AGI. But make sure that you also understand that the IRS is going to be looking at your business. If you have repeated loss, that can possibly increase your chances of an audit. Okay, so make sure that you give it to a tax professional, and then also be looking at your expenses to see if everything that you have deducted is actually for business use. Okay, so be very, very careful with that. Always check with your tax professional about that. Okay, next thing, if you have any what we call fixed assets, so you got any equipment, if you're using your vehicle for a certain percentage of your vehicle use for your business, anything that is over that you've invested physically, right, a physical asset over $2,500 or so, we can take the value of that and deduct it over a period of time. That's called depreciation. Okay, you can't deduct your coaching program. Can't do that. But if you got like a high power sewing machine or a superfine printer, or if you invested, in a superfine MacBook or something like that, right? Those things can be depreciated. But again, check with your tax preparer to see if it will make better sense for you to depreciate it or expense it out. So now let's talk about the compliance part of it. Okay. So when we're talking about compliance, this is about your entity. Okay. So, because most of the time around tax time, not only are you, preparing to file your federal and depending on where you are, your state taxes, you also have to be aware of what you need from your State Department of Revenue and your Secretary of State regarding your business. So a lot of times, I know in the state of Tennessee, as we're preparing for our federal tax returns, we also have to renew our LLCs, our corporations, our nonprofit annual fees, things like that, as well as reporting our franchise and excise tax and our state business tax. So if you are in your state, if you're not in the state of Tennessee, make sure you contact your Department of Revenue and your Secretary of State to know when you're supposed to be renewing your business entities, when you need to be renewing your business license, and if you have to submit anything like for your business tax, which is separate from sales tax, which is separate from franchise and excise tax. If you are, how can I say, if you are doing business from one state and you may be doing businesses in another state, this is definitely for those individuals who are selling stuff online. And I believe the threshold for most states is 100,000 K. So if you guys over there big boy balling and you guys are selling things in different states in excess of $100,000, y'all please find out. You do not want to be hit with any out of state nexus type of fees, things like that. Please find out from your state first, right? And then they'll let you know who you need to contact from those other states. Okay, because that's big, right? Next thing, what else I have on here? We talked about your business license. If you, and I can always talk about the state of Tennessee here. So for the state of Tennessee, for example, GIP Financials LLC, that LLC is registered with the Secretary of State Tennessee. We have to pay $300 a year for that entity. However, the entity alone does not let the state of Tennessee know that GIP Financials is authorized to do business. You have to have a business license to do that. In the state of Tennessee, you have to get your business license wherever you reside in said county. We are in Shelby County, Tennessee, right? So whoever is the authority for the business license in your area, make sure that you are in their good graces and you are toeing the line and doing what you're supposed to do. All right. We talked about the Secretary of State and you're renewing your entity there. So make sure that you're doing what you're supposed to do. And let me go ahead and talk about the beneficial ownership information form, the BOI form. If you have not checked out my podcast episode about that, That was the last one that we did. Please check that out. You have from the day that I record this podcast, it is what? November the 27th. You have until December 31st of 2024 to get your BOI form submitted to FinCEN. All right. So check out the last podcast that I did about that. And I'm going through everything that you need to know about the BOI form. All right. And again, make sure that you check with your state's Department of Revenue to ensure that you are paying all of the necessary taxes that you need for your business and your particular business industry. Okay, because that's very important. I know one thing in the state of Tennessee that a lot of entrepreneurs overlook is that they think that just because they pay the $300 for the LLC, they believe that that's all that they have to do. And that is not all that you have to do. One, you have to file a business license in your county. Second thing you have to do, and this is just for the state of Tennessee. So once you submit your articles of organization for your LLC, your $300, you also are obligated to pay franchise and excise tax. Okay. And even if you hadn't made any money in your business, you still have to pay a minimum of $100. Okay. Regardless if you made any money or not, you still have to pay the minimum of $100. Okay. So make sure that you, like I said, are checking in with your respective states, Department of Revenue and Secretary of State to ensure that you do not get caught by surprise. Because if your state is anything like the state of Tennessee, and it's time for you to get a grant or get a loan or something like that, and the lender or the grantor is going to want to know if you are doing everything you're supposed to do based off of the state's standards. And they may ask you for something called, in the state of Tennessee, it's called a certificate of existence. And you only get the certificate of existence if you have paid all of your taxes on time, paid all of your entity renewals on time, that you're not late on anything. So in order for you to get that, you have to make sure that you are fully aware of what you need. A lot of LLCs in the state of Tennessee are not aware of the F&E tax, and they have to end up paying and submitting all that stuff from years ago in order to get reinstated, to get that certificate of existence. Don't let that be you. So check in with your respective Secretary of State and Department of Revenue to ensure that you get what you need for your business. Okay, because you never know who's watching, and if you stay ready, you don't have to get ready. Okay. All right. So remember I told you that I have a surprise for you guys. And what I have is called the tax prep checklist. And so it's just a simple little page of everything I just talked about. You just check it off, print it out. And as you're going through all the stuff, like start doing it now. Okay. I got the link to the checklist below. Just click the link, put in the required or requested information. As soon as you click, download checklist, the little green button, you're going to get access to the checklist. It's the next little page. And once you do it, print it out, go ahead and start doing everything on the checklist to ensure that you're going to be ready. Because my goal for all of my audience is that you are going to be your tax preparer's MVP client. Meaning that you have everything prepared and you have everything organized, hopefully by the end of January, early February, right? Because you got to have time to get your 1099s and stuff together. So by April, you already have your taxes filed. Okay. That's my vision and my hope for all of you guys. So we want to make sure that you have what you need. Okay, so again, if you want that free tax prep checklist, click the link in the description and you can get it. And I'm going to be also sending some more information, just talking a little bit more about each checklist so you're aware of how to navigate each requirement on the checklist. Okay, simple as that. So, all right, y'all. So that's all I got for today. So I hope that you guys are resting this holiday season. Take care of you, take care of your family, but definitely take care of yourself, because entrepreneurs, we work all the time. As you can see, I'm still working. I'm definitely probably gonna be working the day after Thanksgiving as well. I'm gonna try to, you know, pause tomorrow. So there you go. So I hope that this has helped you. Again, this is quarter 4. Um, getting your stuff together for tax time. Again, I'm Sonia Jones of GFP Financials, or Mr. Be Out Here Money. Thank you. I'm grateful. I'm thankful for y'all for subscribing to the From Chaos to Clarity Unleash Your Business Potential podcast. And I will see you on the next episode. Take care. Peace. Hey y'all, thanks so much for tuning in to the From Chaos to Clarity Unleash Your Business Potential podcast. Again, my name is Sonia Jones of GIP Financials, your Mr. Miyagi of Money. And look, if you learned something from this episode, don't keep it to yourself. Make sure that you like, that you subscribe. If you have some little nuggets, add some comments to the comment section of this podcast. But most importantly, I want you to share it with your fellow entrepreneurs. We want to share this good old fundamental business finance education so you can have the tools necessary to know your numbers and grow your business. All right. Take care, y'all. I'll catch you on the next episode.